going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day. Now, Bitcoin has so far had a very interesting week, getting both the bulls excited and also the bears excited as well, because as you could see, what just happened was we started off the week quite strong. We got Bitcoin all the way up to almost $73,000. We were breaking out of this pennant formation, but then what happened the next day, we literally dumped right back into it. Now, although today we have seen Bitcoin as low as around 67,400, we have had a nice, sort of wick from the bottom, but yet we're still being held down right here. And the halving is also approaching, right? The halving is happening in 8 days, but the concern that some people are having is the fact that we did have this trend right here that the S&P lost, and currently, if we go back even farther to this major upwards channel, you could see that the S&P is literally sitting right there. So we do know that there tends to be a bit of a correlation between Bitcoin and the stock market. And recently, from what we can see based on the data, this has been a very institutional driven bull run so far. We're not really seeing the retail traders in just yet. You're not hearing it on the news. You're not getting phone calls from everybody, right? This is a lot of the big money moving, but what's making everyone a bit worried is what happens if the S&P does start to roll over, right? Is Bitcoin still going to maintain that correlation, since a lot of these new Wall Street guys might just end up treating it the same way? Because we haven't really seen any of those major 30%, 40% drawdowns like we usually see for Bitcoin. In fact, we've only really seen around 20%. So you may argue that maybe the volatility to the downside is decreasing, but then you have some of those OGs, the PTSD guys that have been through a few of these saying, hey, could we be due for that massive sort of 40%, 50% mid-cycle correction, right? Another theory sort of floating around is also the Supercycle theory versus the shortened cycle theory. What if we don't get to 2025? What if Bitcoin peaks sometime this year? Are we going to be ready for it? Is that a possibility? So there's a lot of questions around everybody's mind right now, and I think that I wanted to just take an opportunity to help clarify a bit of what I'm looking at, but also give some other insight, which I will get into. So if you enjoy that kind of content, guys, definitely, slap a like, get subscribed. So I just want to show you really quick what I'm looking at. Okay, so as we can see right here, this is the pi cycle indicator. I know I've gone over this several times. I highlighted it, so now you cannot miss this. Look at this orange circle. And what we see is after we start to build this base, and again, guys, down here, this was COVID. I'm just going to point that out. This was a very irregular move. Generally, we tend to build the base on the bottom moving average, and then as we approach the top moving average, it often coincides with the previous all-time high. And I can show you guys right here, if you take this high and you drag it across this white line, you could see that that's exactly where we interacted with the top moving average the last time we were in this predicament. It was right around sort of November, December of 2020. And then from that point, Bitcoin pretty much had over 200% of a continuation, right? And we had very similar situations down here with the RSI and the money flow. So that was also the same correlation that we're having right here with the RSI and the money flow. And if we look at the situation again, what did we do? We started to build a base around the lower moving average. And currently we're consolidating not only just around the upper part of the top moving average, but also coinciding right here with the previous all-time high peak. So again, history does not necessarily repeat, but it often does rhyme. And this is happening at the same time that we're seeing exchange balances at some of their lowest levels ever. I mean, you can see the last time that exchange balances were this low was basically all the way back in 2018. So are we going to have that supply shock, right? Is it going to behave differently? Those are some of the most dangerous words you can use when you're talking about markets. This time is different. Although this time has thus far been quite different, right? Falling below the previous all-time high and the 200 weekly moving average, but then on the flip side, putting in a new all-time high before the halving. So you can actually say that we are experiencing something quite different this time around. But, what if they just rug us all, right? What if it is a triple top? And what if all the bears are right? And what if we put in sort of, that Amazon chart where, you have the one top, the two top, the three top, and we all just got fooled and we all just got rugged and it was all just a big foolish, game and the institutions won and they pumped their bags and they dumped on the retail. Well, guys, I mean, again, we are still maintaining in this upwards parabolic trend, right? And this is what I wanted to talk about because I have to give a massive shout out to actually Kevin Svenson, guys. If you have not been following Kevin Svenson, I was introduced to him about 4 years ago, and he was talking about the correlation between the stock market and Bitcoin, right? And this is something you really hadn't seen a lot of people talk about. And as I began to watch him, I noticed that he had a very level-headed approach. And he also, we all make mistakes. We all make bad calls, analysts, traders, nobody's perfect. But Kevin actually tended to nail a lot of these forward-thinking sort of moves of the market rather than getting involved in the emotion of what's happening right now. I found that Kevin had a really good sort of, I don't want to say crystal ball, but he had a very good knack for forward thinking and almost like trying to understand where the markets are probably going to end up being versus where they are now, right? Because markets are in fact forward thinking. They are basically led by anticipation. So I reached out to Kevin and I said, hey, Kevin, listen, people are tired of hearing me talk on the channel. So we actually got Kevin Svenson on today on this video. I really highly suggest you guys stick around to the end. This is a very, very rare occasion that we do these types of things. But I wanted to ask him about his opinion on the markets right now, the actual effect of what's going on with the ETFs, what he really thinks could end up happening. I even asked him what he thought his worst case target. God forbid everything went wrong, black swan event. How low do you think we could go? How low or how high do you think we could go as well? And I asked him the same questions about the S&P and the correlation and what he thought. So without further ado, guys, I highly suggest you stick around to the end of this video. I think you're going to find a lot of value out of it. So without further ado, let's hop in. All right, Kevin, it is awesome to have you on the channel, man. We have been talking back and forth for, I don't even know, man, years at this point, and I just feel like this is a much long overdue collaboration. A lot of my subscribers, they watch you, and some of yours, I see them on my channel. So I feel like this would just be a really great time for me to shut up on my channel and allow maybe somebody else to give a different perspective about what they're seeing, in the markets and how they're sort of, looking at the data, looking at the news and just kind of get your opinion on things.
Absolutely, man. I appreciate you having me on. You've given me so many shout outs that the time is now. This is the interview we had to do. So let's do it.
Yeah, absolutely. And look, man, I just look for good content. I see something I like. And, a lot of the times I'll be looking at something and then you'll put a video out. Actually, there was one time where not even knowing we put out almost the same video with the same topic. And I was like, wow, that's crazy. But
yeah, we've been pretty aligned. We've been very aligned for years, just naturally. So.
Yeah. And I love your level-headed approach too. Like, not doing every 1 hour, like you sort of like step back, look at the macro. So I would say the thing right now that a lot of people are sort of giving you a lot of credit for was you kind of spotted the parabola forming for Bitcoin. I would say a lot earlier than most of us did. You kind of saw that coming before the rest of us. How do you feel about that right now? Are you still feeling that, like, should we still remain bullish or, with the ETFs?
Yeah, I mean, yeah. So the way that I see it is if an analysis is working, just keep going with it. The trend is your friend. And right now the parabolic trend is still, very intact. Bitcoin is going kind of sideways right now, but Bitcoin has so much room to move that we would still be in the parabolic trend. We could come down even into the 50s and it would still be a parabolic curve. So that trend we're so elevated right now that there's no reason for me to think that we're not in that trend. And obviously I can show you guys the charts in a second whenever we get into that.
Yeah, you can hop in, hop out anytime you want. I mean, we're just kind of freeballing it here.
I actually have a funny picture here. Why is it going down? This is most people. I think that the price is doing. I mean, Bitcoin. If you look at the chart, Bitcoin's price is just going up and up and up. And then like you see this little candle here, and people just this is basically all of Twitter today, and we're still sitting at 69,000 basically. So this parabolic trend, a lot of people want me to declare exactly where it sits, but we don't know exactly where it's like you have all the touch points right here. Actually, let me just flip to the Kraken Pro chart and then pull up the textbook diagram. Every time the price touches the parabolic trend line, and we're going to get into the short term after this, every time the price touches the parabolic trend line, that is considered a base. And so we are currently creating base 4. According to the textbook, because the next touch off the trend line, maybe we've already touched it. Maybe we can go a little bit lower to touch it and then bounce. But whenever you touch the trend line, that is the creation of a base. And so with that larger picture in mind and knowing that, like understanding that the parabolic trend is still here, If you look at the short term, in theory, this parabolic trend line could come in wherever the price touches, meaning that it could be here and you would have to adjust the parabolic trend line to match that, or it could be a little bit further out, which is just how you analyze it because you don't know exactly. I would assume that this was the low because of the way that we're breaking out right now, or at least attempting to. But in theory, Bitcoin's price could go sideways still and kind of just wash people out. So in the short term, if you look at the daily RSI, we have had a breakout of the daily RSI, and we're now retesting the RSI breakout. So this is still, in my opinion, considered a retest in the short term. We've broken out and we're retesting. And yes, we are currently back in the pennant formation, though we haven't closed the daily. Maybe we close up a little bit. Maybe we close in it. But what we want to see is sort of a break, hook, and go on the daily RSI. When would it be a failed breakout? It would be a failed breakout if you're sitting, or I guess breaking below the structure and the RSI cannot maintain the breakout, right? So if we're coming back below the resistance and we're falling back below this RSI resistance and we're closing dailies back below it, back below this resistance line, then it would be at least back in the consolidation. It would maybe give bears a little bit more, I guess, credence in what they're saying. But as of right now, I think that this is just a retest of the RSI breakout. So that's currently the short-term idea, is that maybe we hang out here. We've had a little bit of slowed momentum. I think the S&P is down today a little bit, and the S&P did dump the other day. So that's kind of putting a little bit of skepticism, I think, in the short-term speculators' minds, because it's all a confidence game. First of all, I mean, one of the metrics that has been widely looked at is the MVRVZ score. And whenever the market is topping out, we're usually sitting at this red upper band. And quite simply, I mean, it's not too complex. We're like halfway there. So in terms of the perspective from the MVRVZ score, Bitcoin is sitting down here. What is it? Just below a 3. And usually the top would be somewhere like 7 or as high as, 9 or something like that. So we're at a 3, and we have a lot of room to move up in this cycle. Now, there's a question of how is that going to happen? How are we going to move up? Well, Willy Woo is making a point that his Bitcoin macro index, this is a Willy Woo post, is showing something more like 2013, where we have a big run up and a long consolidation and a second major move. And so if this plays out, what you're going to see is the market has this huge parabolic run that we're in. And then it sort of slows down, and people will say the cycle is over, but really it's just a longer consolidation because the run up was so quick, and we run up later, and then everybody is sort of thrown off guard because they made an assumption, and the cycle actually ends up playing almost the exact timing that it usually has, but we just have a longer consolidation in the middle. So like stuff like that is totally possible, because
that would throw everybody off, because then what would happen is you'd have all the people calling for the shortened cycle, basically saying, see, I told you so, right?
Right.
But I mean, seriously, like, if you look at the previous, so we used to have 40% drawdowns all the time, right? That was the norm. And then if you look into the previous cycle, we were more in like the 30% drawdowns. And now we really haven't seen anything more incredible than a 20% drawdown. So is this suggesting that the volatility as far as to the downside could be minimizing as we continue over time? Like, for example, if this is what we're looking at, a massive drawdown, how do you think the markets would react, both, for example, the OGs and the new money, if we did have a mid-cycle correction of, let's say, 50%? Because, I mean, even a guy like me, that would be pretty intense to assume it to be just a mid-cycle correction, because we don't really see that very often.
We're still below. Well, I mean, I guess Bitcoin is sort of at the previous all-time high right now, but generally speaking, we're not like fully cleared above the all-time high. And I believe that while we're still kind of below the all-time high, the demand is going to be very high, because now there's ETF, Wall Street involvement. Everyone wants Bitcoin. Everyone wants a piece of the pie, while we're below that or at the all-time high, because they think it's going to go higher. That's what they're speculating on. So I think that anything below the all-time high is going to get bought up pretty fast. Sure, there's still a correction potential below the all-time high. I mean, anything's possible. Maybe even the parabolic trend breaks below the all-time high, but it likely wouldn't be all that long-lived. It would be bought up pretty quickly. A lot of people missed those low levels, and the path of maximum pain right now is actually just up. No second chances. You missed it, you missed it. You know, good luck, I guess, right? So it's like that's currently, I think, the path of most pain for most people, because we had the FTX, I mean, crypto industry got like destroyed at the end of 2022. And there was so much skepticism at that bottom that people weren't buying enough, but the institutions were plotting basically their entry into crypto. So people are sort of, I think in a large part, retail is missing out a lot. And I think
they're definitely missing out.
and whenever we have a little dip right now, there's so much fear. And that tells me that we're not seeing euphoria yet. We're not really at euphoria. If everyone's scared of every red candle, when you the moment you got to be worried is when when everybody is saying buy the dip, or don't be afraid. Then it's like, wait a minute, that means you're all invested. That means retail's fully invested.
So are you saying, for like let's say we did have a repeat of back, what was it, 2013? Was that when the chart? So you are like, theoretically, right? Could you see $150,000 Bitcoin, then 50% correction to 75 type thing? Like, or you know what I mean? Like,
yeah. I think so.
Like, okay. So for example, we've created a solid base, 30K. We've really built that. What do you think is at this point? Obviously not saying like Bitcoin has failed going to zero, but like, what are the levels where you're just like, you just do not see that opportunity? Like, what is your lowest you think Bitcoin would go outside of like insane Black Swan World War III type thing? I mean, are there some levels
outside? So, I mean, I haven't really thought about that, but I suppose you could just look at basically the last Black Swan.
Like I don't want to call out some of these analysts. I think you know who they are. The guys that were calling for 3,000 when it was 15, those guys,
Right. Bitcoin during COVID went from 10,000 to 3. Basically, the low point of the bear market, it almost more or less reached it for a moment. And it's like, sure, that's possible in the worst case scenario where the world is ending, basically. But other than that, I mean, I would say a very fair value would be, if you look at the chart, like a really low level that would be sort of fair. It shouldn't be a full orange color, make it green. Would be something around this region right here, I would say, is sort of like the low end of it. It's like, okay, if the stock market started crashing, there's some sort of underlying issue with the economy, which we don't really have right now. There's nothing too drastic going on. If something like that happened, I think that we could start trending down to something like 25 in the worst. Again, you're asking me worst case. Let me make this clear. You're asking me worst case. That is not.
We have to clarify, because it will get taken out of context.
It will get. People are going to say that that's my prediction now.
Somebody's going to repurpose this and say Kevin Svenson said we're going to 25K.
So that in that case,
God.
yes, we could see a big sideways range, sort of in that fashion. But again, right now there is no major underlying issue in the economy. In fact, some of the recent economic data is actually somewhat positive, and the Fed is saying that inflation is somewhat under control, but they're going to leave rates high because they don't want to risk it getting out of control again. So it's like things are generally okay right now. So I don't foresee anything bringing us down like that. So I think that the demand that we're seeing for Bitcoin will continue. And in fact, the other day, like I was saying, the S&P dumped and Bitcoin didn't, right? It just actually held a higher low. And so that means that there's like more confidence in demand for Bitcoin.
Right.
I can't really make that comparison.
I want to piggyback on that super quick and I do want to talk about altcoins. And yes, we are just joking about this. This is just for fun. I was playing devil's advocate. I don't think we're going that low either. But one of the things that I wanted to ask you your opinion, because there's like 3 different camps of people right now. And it's either we're just going to do the 4-year cycle, and then that's that, very predictable. We're going to top sometime next year. Then there's the shortened cycle theory. They're saying, well, hey, we've never had an all-time high before the halving. We also never went below the previous low. We also never went below the 200 weekly. So, both to the downside and to the upside, we've been surprised all around. So are you in the camp of the super cycle, the normal cycle, or the short cycle? Or
I think it's very dangerous to ever be in the camp of the super cycle, because if you're just jumping into that camp, you're less likely to do the right thing and to take profits at the right time, because every cycle is a super cycle according to a bunch of people, and it's never a good idea. And it should always be, I think you should always approach it in steps and in probabilities. Never 100% say it's going to be this or that. So you should have, in my opinion, areas where you're going to exit based on certain circumstances. You can hold a moon bag for the super cycle idea, but if it doesn't come and you're wrong, well, maybe you would want to have taken profits by then. And that's the Bitcoin halving cycle profit indicator that I created. This is the reason why I created this, was to give time targets, because a lot of people make a big mistake where the only thing they have are price targets. And what if your targets aren't reached? A lot of times people's targets are not reached. So what can you do outside of price targets? Well, there's time targets. And if you look, this indicator that I created, it's free to use on TradingView, Bitcoin halving cycle profit indicator. So I think it's one of the only indicators that has halving cycle in it, the name. So it's pretty easy to find. If you look at all the cycles, this is the Bitstamp chart going back to 2012. Each orange line is the halving. And then you can see there is a profit start and a profit end, 40 to 80 weeks after the halving. In the 2013, 2014 top zone, the top came in slightly more towards the 40 weeks after the halving. So halving 40 weeks later, the top came in closer to the 40th week. 2018, it came in right before the 80th week. And in 2021, we basically, both tops were the 40th week and the 80th week. So this is just showing you that the most likely area where you're going to see a top come in is around 40 to 80 weeks after the halving. It's not guaranteed. Anything can happen, right? Anything is possible. Nothing's ever going to be the same, but it's just a high likelihood, because it's had such a high hit rate of being the top in the profit zone. And I think it's a good idea for everybody to just get time targets set, because your price targets probably won't be reached, or they might, or your price targets are too low or too high, but you can get rid of all of that by just having a percentage of your targets being time. So instead of taking 100% profit at, your target, you say, you know what, I'm going to take 20% profit every so often if we reach this time period. And if we also hit my price target, I will take more profits there as well. So now you have multiple factors that you can work with, and you're more likely to succeed in taking profits by doing that. So
it's like DCAing out, versus DCAing in, but a lot of people, they're concerned because they want to time the absolute bottom and time the absolute top. And I mean, even the best traders, that's not going to happen, because nobody knows. It's,
even the biggest investors in the world. I mean, if you have a lot of money, sometimes you can create the bottom if you're a massive whale, but even people like Warren Buffett say that they never predict the bottom. They're ready for their stock to drop 50% before it goes up. They're just looking for value. So yeah, I mean, it's just something that in the last cycle, I didn't get the top prediction correct in the last cycle, and I don't think many people did. Things were cut short, it seemed. FTX and the Fed raising rates, all that stuff. And a lot of people complained about the fact that it didn't take enough profits. So you just got to add more factors instead of price targets to succeed. And that's kind of the purpose of this indicator.
So that is something I was going to bring up, but now that you're talking about it, that's a big question on everybody's mind. Is, now that we have these ETFs and it's the new paradigm and everyone's hopping in, the truth is that, if you really look around, it's been mostly an institutional driven, sort of bull run, really. I mean, you're not really hearing the euphoria that you saw before. I'm not getting the phone calls from people asking me about crypto. And, you remember how it was the last time we were at these levels. So do you think that that's a positive for Bitcoin, that we don't even have the retail in? Because what I'm worried about is if it is being mostly institutional driven and these guys are coming from traditional markets, then would that mean that if the S&P was to start tanking, that they would immediately associate, that mentality with Bitcoin, and then Bitcoin's got to come down with it? Or
that's actually a very good question, because something that I've been doing for many years now is almost every day studying the correlation of Bitcoin with the S&P 500. And there is a correlation on the higher time frames. That is undeniable, as long as you're actually looking at the data and not just some sort of belief you have. It is very much correlated. But the thing that we've seen in the past, I guess I can pull up the S&P here and then just pull up Bitcoin to compare. What we've seen in the past is that it's generally aligned on the higher time frames. Yes, there are differences. Of course, there are differences, but the major market tops and major market lows are generally aligned. And what I've noticed in the past is that Bitcoin would react very much to the S&P 500, like very quickly on a daily basis. But recently, this year, it's interesting because now Wall Street's getting involved and we've had more moments of a decoupling than we have in previous cycles. That's happened multiple times already in the past, I guess, 6 months, where the S&P will, like right here, I guess, let me just see if I can get this to line up. The S&P was coming down, the candles, and the orange line is Bitcoin. S&P is coming down, Bitcoin's basically coming up. So Bitcoin's coming up right here while the S&P is coming down. And the other day, the S&P broke the long-term trend line. If you look at the trend line that stems back to November, this one was broken and Bitcoin basically did nothing, didn't really react to that breakdown, which was something that basically in the past, Bitcoin would sort of dump with the S&P in a moment like that. But Bitcoin's seeing higher lows against the S&P's lower lows. So there's actually been a slight decoupling in certain moments. Now, a lot of people have a very, very strong misconception with the idea of a decoupling because they think the word decoupling means that it's decoupled forever. But a decoupling could be for a day, for a week, for a month, for a year, or forever. But usually, in this case, it's for about like a few days or a week or two. And so Bitcoin is now seeing a little bit of difference, and the institutional involvement, I think, is actually making Bitcoin act more decorrelated, which is like very counterintuitive. But this is my observation, is that the Wall Street coming in has, I think that Wall Street is sort of supporting Bitcoin's narrative and its use case, and money, runs the world. So if Wall Street, if the big players are essentially treating Bitcoin like it's supposed to be treated and regarding Bitcoin as it's supposed to be regarded, as its flight to quality, then they are the ones that are in a position to make it less correlated. So in the past, when it's just retail, like more retail trading, not too much involvement from institutions, it's more correlated to the stock market because people are kind of just finicky. But if the big money comes in and says, all right, here's the narrative, here's what Bitcoin's going to be, they can actually make it happen. So I've seen a little bit less correlation this past 6 months, and I'm hoping it stays that way. And I'm hoping Wall Street actually begins to treat Bitcoin that way and regard it that way, because that is the key factor, is how does the big money treat Bitcoin and regard it?
Yeah, and the other thing too, which is kind of shocking, because we have this mentality, almost like a trader mentality, buy the dip, sell the rip, kind of thing. But what's funny is when you're talking about these like really, really, really big funds, of course you have the ones that, maybe they're hedging or whatever, but a lot of the ones that are looking to set it and forget it, especially with these ETFs, they're not even really in yet. They're still doing their due diligence. And it's almost like backwards world. It's actually like the higher the price gets, the more comfortable they feel getting into it, with more liquidity and then also more history behind it. So it's funny because you'll hear them in the comments like, oh yeah, these guys are going to totally buy at 100,000, but they're not buying now. And it's like, well, believe it or not, when they present their clients with that information saying, hey, look, here's what it's been doing ever since the ETF launched. Here's the data that we have. Look at how well it's been performing. And these people are looking to just park, their funds in there for, who knows, like 5 years, 10 years or something like that. I think that, it actually could be one of those sort of backwards versions where, no, they're not waiting. Maybe there's some of them waiting for the dip, but really when you're looking at long-term capital investment, they're not doing what we're doing. They're not drawing lines on charts and trying to catch pockets. They're just like, hey, Bob, listen, man, I heard I can get some Bitcoin, get some on the phone. And it's basically just like, I don't know, allocate like 2 to 3% and just let it sit for 5 years and we'll see how it goes.
I think the institutions, the bigger, it's what you could call it, is sophisticated money, and they like sure bets. They like sure bets. They don't want to bet. They don't want to be gambling like kind of like, how a lot of us do in crypto. We're buying these brand new coins and it's high risk, high return type of thing. They want to know sort of who is in here, who owns this and what are they planning? And they want to have a really good idea. So I think what you said, it's true that they are almost more comfortable, sort of the higher it gets, the higher the market cap, the more bigger players that are getting in. Because to them, it's more of just like a product to sell, more or less, like Bitcoin ETF. It's kind of just like they just want to make sure that they're in a good spot to do it and that it's safe for their clients. You know, at least they won't make them look bad or all that stuff. So yeah, they want to know that it's being bought, right? So
Yeah, I mean,
a lot of institutions might be waiting, you know.
They might be. I mean, people even talk about, imagine what happens if MicroStrategy, ends up getting into the top. It gets in the S&P, or high enough valuation, because that was like the quasi ETF before the ETF. You know what I mean? Get allocation to that, and then you have indirect exposure. So, it's weird for us in crypto. We're just putting things in wallets, private keys, sending them all over the place, buying dog coins. But, for the average person, this vehicle, it may not be Satoshi's vision, but it's kind of what needs to happen if you really want to push it forward. You can't have the libertarian view, and Bitcoin is just going to be that, but then you want the price to go up. You know what I mean? Like, you kind of can't really have both, I guess. It has to mature,
Yeah, it's. I think that basically one thing that Larry Fink from BlackRock said that caught my ear, that was not discussed by most people, because he said at the very end of one of his interviews, and it was like a quick mention, but I think it was almost, I feel like that's one of his main focuses, which was why he didn't make it a big point, which was he talked about the spread on exchanges for Bitcoin and how whoever can close that spread can make a lot of money. And I think what they might want to do is sort of take that big spread we always get on the exchanges, the arbitrage, and he wants to use his high-powered AI systems, the Aladdin system, whatever he uses, right? They have some of the, I mean, they own all the data on Wall Street anyway. He wants to close the spread on exchanges. And so I think that essentially, as the market cap gets higher and the spread is getting closed, well, the price is going to be more stable. And I think more institutions will be more comfortable with that. Right. And so I think BlackRock is trying to tame Bitcoin. I believe so. But we'll see, right? Because they don't own all the Bitcoin. And Michael Saylor owns, like, well, what is it, 1 in 30 Bitcoin or something like that? Is that true? I think that was the math.
1 in 30 sounds like a lot. I thought it was just like 1%, but I could be wrong. I
I
haven't
might be
really
wrong
followed
too.
that. Plus, he buys Bitcoin like every week. So I mean, maybe at this point he is.
Yeah.
Yeah, so I don't know how much he owns and stuff like that, but here's a serious question too. So you get the Moon Boys, but then you also get, you saw Balaji $1 million Bitcoin. Could it happen? Possibly. We've seen crazier things. But when it comes to, for example, the supply chain, or not supply chain, the supply side crisis, it is a fact that on a lot of the regular exchanges, you can go on Glassnode and you can pull up charts and you could see that the available on-chain or the available exchange, I should say, Bitcoin has been going down, and it's still going down. It was about 12%, I believe, a couple weeks ago, and now we're down to 11%. So it's still showing that it's dropping. I mean, what would happen if we really did have a supply shock? I mean, because there's some people that say that will never happen, because at some point price will get high enough and someone's going to sell, so they're going to put that back on the exchange. So we'll never run out of Bitcoin. But what is the possibility with the amount coming out getting cut in half in the halving, and then the continued amount of demand coming in? I mean, is this type of scenario possible, or is it like just crazy?
Yeah, no, I mean, I think that that's already a factor, isn't it? I would say it is, because the exchange supply is dwindling, right? It's coming down slowly, and so it is a factor already. And I think that factor is going to be one of the things that drives the market to its next major high, is that these big players like Michael Saylor and whoever else are just taking Bitcoin out of circulation. And that's going to be one of the factors that gets us to a higher level. And of course, at some point, someone's going to be sitting on a lot of gains, and they are going to want that cash, and they are going to sell. And then the supply will increase again, and there will be a bear market, as always. But yeah, that is certainly a factor. Certainly a factor. I mean, I'm not sure if I'm the best guy to answer that question in particular, but in my mind, the supply shock factor for Bitcoin is, I felt like it's always been a factor, right? Isn't that kind of what it's about?
Yeah, you're right. Yeah, and the thing is the halving happens and then it's a big nothing burger. But the same way with the rate hikes versus the rate cuts versus really any type of monetary policy, you don't see the effects immediately. They're trickle down. They take 3 months, which is why you tend to see. I mean, maybe this time we did put in a new high before the halving, so it is technically different. But I wouldn't be getting overly excited immediately. Even worst case scenario, we had a retest down to like a lower end of your
Yeah,
parabola.
who's to
Maybe.
say that if COVID didn't happen, we would have had this exact scenario? Because COVID kind of set us down in 2020, like really far, and we kind of were just stabilizing there during the halving. But before then, we were coming up pretty quick. Like it looked like we were about to. Maybe it would have been similar. Who knows? It could have
Yeah.
been. So is it different? Yes, it is, right? That's a fact. It is different, but maybe it's not all too crazy that we are here at this point. Maybe not.
So I talked to some OTC desks. Now these are like not anything that you would know about in crypto. You have to basically get a personal invitation. These are guys that are dealing with extremely high net worth individuals, doing $30 million trades over the counter. Like I'm not like that's the kind of desk. And I just got off the phone. I'm not even making this up, with one of the guys, the head over there this morning, the guy I always talk to. And he told me, you got to see what the options are, like what these guys are doing right now. He's like, I mean, it is so bullish. And people are just, they don't understand. They don't really see, because they see the crypto influencers, the YouTubers, and they don't just see the level-headed, just big money, what they're doing and how they're playing this. And they're positioning themselves in a very bullish manner. Like, I mean, there was even a few instances, I'm not going to say that they ran out of Bitcoin, but they were telling me they were having difficulty fulfilling these OTCs, at these certain prices, because they were like, we just can't source that much. You got a guy coming in trying to buy $100 million worth of Bitcoin OTC. That's not happening. You are going to push the price up. So
Right.
yeah, I can definitely tell you from actual experience and from what I've heard that yes, it's looking nothing like
Larry
that,
Fink, the CEO of BlackRock, he called this uptrend. He called it a flight to quality, right? And so that's the CEO of BlackRock, the largest asset manager on the planet. And
Yeah.
I think he recently said that Bitcoin, the ETF, was beyond expectation, did better than he thought. So it's like follow the money, right? I think a lot of the people that, a lot of the bigger players out there are kind of just saying, wait a minute. So if they're getting involved, it's probably a good idea. It's probably safe. It has a future, has a long-term value proposition. So it makes sense to me, right? If the big
It's not,
green light just came on because of BlackRock.
yeah, it's not even an opinion. It's a fact. Literally, it's a fact. It was the most successful ETF launch of all time, officially.
Ever. Yep.
Officially ever. Yeah. So now that we're done talking about the flight to quality, how about that flight to shitcoin town? Let's talk about, it's actually funny because, I've had a few comments about people, I've been talking about altcoins and they're like, oh, like, what are you selling out? Like now you're talking, I'm like, well, first of all, guys, the name of the channel is Crypto Zombie. If you go back 8 years ago, we've talked about altcoins. The reason we focused on Bitcoin was because, number one, in a bear market, altcoins you're just going to lose all your money. Really, you are.
Yep.
And, trying to time bottoms, you don't need to time the bottom of an altcoin move. You just need to get that meat in the middle. I don't care if I miss the first 20%. I can get the whole middle of the move. You know what I mean? And what I've been trying to explain to people is that, mentally, once Bitcoin gets to the all-time high, a lot of the newer retail that's going to come in, they're going to look at it and they're going to say it's too expensive. They said that when we hit 20K.
They're already, yeah, it's already that way.
Yeah.
Yep.
So they're gonna look into the altcoins, and we were pulling up different types of charts, and right now, I'm not saying throw everything into these altcoins, because the only thing I believe in long term is Bitcoin. I mean, I wear this hat every day. I mean, I think I've made that clear. But right now, especially if you're in the space, the same way that you had the ability to front run the institutions had you got into Bitcoin now, you also have an opportunity to front run the retail who's going to come in and start buying all the doggy, Shiba Inu, or whatever tokens. And that's when these valuations get astronomical. They don't make sense on paper. There's no reason for this company to be valued at 2 billion, 3 billion, but that is just how it goes.
You're going to also be front running the larger players that will want some diversification. Right now for the altcoins, if I share my screen, the total three is the altcoin market cap, which excludes Bitcoin and Ethereum. It's everything but Bitcoin and Ethereum. And I'm looking at the sort of just setup that we're in. This is 2018 to 2021. And if you look at where we are now, you know, human behavior tends to repeat, right? That's sort of a fact. And this is where we are from 2022 to 2024. It's almost a spitting image. And the altcoins have their biggest runs after the Bitcoin halving, because the narrative is with Bitcoin until the halving, right? There's still more Bitcoin narratives after, but that is the strength of the Bitcoin narrative going into the halving. And then after the halving, if there's not too much of a narrative, well, I mean, the ETF narrative is, of course, going to continue on for a long time, but then it goes to the altcoins. The money starts flipping to the altcoins. And if you look at the total three, we are in that position now where we're testing that first lower high, just like in 2018, we had the first lower high. Now we're sort of at that point where we're testing the first major lower high of the altcoins, the altcoin market cap here. And that means that we have quite a bit of movement ahead of us if there's going to be even just somewhat of a resemblance of the past cycle. We have a lot of movement here, and we're not even close. Well, I guess we're like a little more than halfway to the all-time high for the total three. But in theory, there's a lot of movement to be had for the altcoins. And when that happens, you get major swings. Like you said, it doesn't make sense. These coins go up to 10, 20, 50, 100x, and then they go down 95% in the bear market. And you have to take profit because it's just a speculation game. It's just a game that everybody's playing. And most altcoins will disappear. And the ones that actually provide some level of utility, some value, will stick. And that's not very many of them, right? So
Yeah,
that's how it goes.
and one thing I noticed that we're not really full on in the euphoria stage yet is, you know, in the past we've seen you know, all the altcoins will just run all at the same time, and it was just, you could just literally just go like this and you win. I noticed that that's not really happening right now.
Not
So
yet.
right. So that's kind of like the I guess you could say like indicator to let you know that, like, I made it up. I'm not going by the Wall Street cheat sheet. I just was calling it, we're entering the mania phase. That's what I said.
You call
But
it throw a dart season.
yeah, the mania phase, but we're not at the euphoria phase. You know, the mania
Right.
phase is like where we're starting to get, like, the gas is going, you know, starting to train starting to move, but like we're not quite out of the station just yet. But once that train gets momentum, there's nothing stopping it, you know, until unfortunately, you know, something does, and then that's bad. So, you know, just I feel like we've been talking for a long time. By the way, guys, you know, obviously smash the likes, follow Kevin. I forgot to say that earlier. Awesome analysis.
You give me so many shout outs that they probably already know. So
True. Well, I'm gonna just be real. Like, I don't really, I don't like watching a lot of YouTube videos because it messes with my analysis. And, you know, sometimes I'll see someone post something and then I start second guessing myself. And historically, that's when I make the biggest mistakes, when I second guess my strategy. So, but you are one of the few channels that when your video pops up, I do watch it. I just want to say
I appreciate that. That's awesome.
So,
I'm actually the same way. I try to tune it things out because if you look at everything, you'll get so confused, because
right.
a lot of times, a lot of people on the social media, they're not really posting their true analysis. It's for clicks.
Yeah.
It's what it's for. So
Right.
it's like, you know, you're going to get confused if you're watching all of these things when they're all just trying to get your clicks. It doesn't really help. You know,
that's the downside to being a YouTuber is, like, you know, like, I know you have to make the titles kind of like, you know, whatever, but my
I do
logic
that, but
is,
yeah.
My logic is like, you know, I don't clickbait. I make, you know, kind of crazy titles, but my logic is, hopefully once you click and get inside the video, then there's value.
Exactly.
You know, so
Exactly.
I'm not tricking you into just watching something, whatever. So before we go, Kevin, I just wanted to ask you your opinion, or I guess I could say your strategy. It doesn't have to be exact percentage, whatever. So, you know, obviously I'm assuming you're beginning to maybe allocate more to the altcoins or whatever, but how are you playing this? Like, ultimately, I know you have your take profit indicator. We went over DCAing. So, like, what is the end goal? Like, when do you say, you know, that's enough for the altcoins? Do you rotate into Bitcoin? Do you end the cycle with 50% cash, 50% Bitcoin? How do you play this cycle out, assuming we continue the 4-year and then we're going to have to deal with another bear again? How would you play that?
So again, you know, the altcoin market cap is still not at a new all-time high. Bitcoin has barely broke its all-time high. And of course, you can't really rely on past cycles, but in my mind, it's like, even if we have longer consolidations, this cycle is not not even close to being over. There's a lot more upside. There's a lot more growth, right? And so I'm expecting a longer period of sort of upside. Doesn't really matter how we get there. So I'm bullish is my point. When it comes to the altcoins, if you're going to get into altcoins, I think the way to play it is don't bet too big on any one, but have like a good sum. And if any of them get up to the top of your portfolio, right, like they come up the list and they're sitting at the top, instead of just hoping and praying that it continues and it's your biggest investment ever and you make all this money, which is what most people do, and it, you know, sometimes it works and most of the time it doesn't. If your altcoin picks get all the way up your portfolio, take like 25-50% off the top of that and put that money into your high cap coins where you know the value is retained and it will grow with the market. So you make a huge gain on an altcoin, take half that profit and put it into your high conviction plays, because now that gain will continue to grow in a more secure investment. And so you can get these gains on the altcoins, but you can also position those gains into your good picks,
right,
which I think is very important as the cycle goes on, right? So that's more of a as the cycle's going type of strategy. So if you just sit there and wait and your price targets haven't been reached and all this time has passed, you're probably not going to take profits at all. So you got to have time targets and price targets and just set yourself up to succeed with as many areas. Make excuses to take profit. Make excuses for it. Don't wait too long. You know what I mean?
That was my biggest problem in my first cycle is I held everything and it started going down, and I essentially married these bags, and the majority of them, they never recovered. But yeah, man, anyway, I just want to say this is an incredible conversation. I'm so glad to get you on the channel. So yeah, man, I mean, I don't know if there's anything else that you want to just like leave us with before we go.
No, I mean, I think just have a plan. Again, set price targets and time targets, and don't have one price or one time. Have multiple. Take it in steps. You don't have to be all in, all out. Be organized and just stick to your plan. If your price targets get reached, do something about it. Don't just say, "Oh, it could go higher," just because then you're like everybody. You're like everybody else at that point. Just
exactly.
Don't do that.
And you know what else too? Like to just kind of agree with you is you know, be able to adapt. Basically, like Darwinism. You know what I mean? Like, you know, sometimes, you know, in the bear market, you get stuck in this mentality where you just cannot flip bullish because you're just so PTSD from the previous cycle. And then when you hit the euphoria stage, you're so bullish that you can't accept that it's
there's one thing that I want to say based on this, and that is the psychology is that when everybody is fully invested, they are the most bullish, right? So when the prices are really high, the prices got there because everybody became fully invested. Everyone's bullish. And at the bottom, everyone has taken the most losses, and they are the most bearish because they are the least invested. That's how the price got there. So that is sort of the not obvious thing to market psychology, is that when everyone's bullish, they're fully invested, which means the market cannot see there's limited growth now.
Right.
So
there's no more investments to be made. And it's actually funny because sometimes, you know, as a person that, you know, makes YouTube videos and comments on Twitter, people always want this like really complicated explanation for why things are happening, but sometimes it like is the simplest explanation.
I remember the demand. So like, why are we going up? Demand is higher than supply. I remember I posted that and I think you retweeted or something. It's that simple. It's like that somebody bought. That's why we're going up.
Just like open up your economics book and read the first chapter. So, all right, Kevin, thank you so much. I really appreciate. I know it's a beautiful day by you, beautiful day by me. I know
I'm going to get outside and play some soccer. So yeah,
I'm going to go ride a bike or something. So,
man, honestly, thank you so much for having me on. You've been such a big help and a supporter of my channel and my work, and like you've given me so much exposure, and it just felt right to come on here, go on your channel, and do this. So thank you so much, man. Appreciate it.
So thanks again, guys, if you stuck all the way to the end of this video. By the way, that conversation actually ended up being like over an hour and a half. So it is condensed. We did cut some parts out because it would just be way too long of a video to put out. But I do hope you guys got some value out of that. And I hope you understand that there is this FUD that comes out, you know, when you get these dips, when you get these moves. But at the end of the day, the market mentality, the sentiment, right? Just looking at the charts, looking at the facts, looking at the numbers, and understanding that history, you know, it doesn't repeat exactly, but it often does tend to rhyme. So thank you again, Kevin, for coming on the channel. You know, go check out his channel for sure. If you guys like this kind of content, you want me to do more of these types of videos, I would love to get people on the channel, you know, just to get other people's opinions. I'm sure you're tired of me talking about the same thing every single day. So that being said, I love you guys. Super long video today, but I do hope you found some value out of it. You guys are awesome. I love you. Obviously, don't forget that Meta Signals is increasing very soon. If you guys want to, you know, check that out. The NFTs are still for sale. And of course, if you do want to learn how to trade, check out these tutorials popping up right here, right now. Until next time, stay crypto. And of course, peace out.